Hello and welcome to another episode of Voice of Crypto. This is a podcast where we chat with people in Web3, crypto, metaverse, NFT, and everything in between. And today I have a very special guest, Marcus, with me. And why is he special? We will talk once we start the conversation here. So, Marcus, welcome on the podcast.
Thanks for having me. I'm excited to be here.
Great, great. So, Marcus, as when I talk to all my guests, the first question which I ask is, what was that accident which brought you towards Web three? Because I'm sure none of us dreamt as a kid that we will get into Web three or crypto or NFT because probably it was not even there. So, do you remember that incident, that accident which got you into Web three, and what you used to do before Web three? What has been your journey till now?
Well, I think my journey was a little bit longer than maybe other people. And I think it sort of started in January 2013 when a colleague next to me started to buy Bitcoin on Mt. Gox. And, I tried as well, but it took like a week to get the settlement. And it was really like a cumbersome operation and didn't really pursue it then. And then in 2015, I started my own hedge fund, and one of my analysts, he was like so into crypto, and he tried to set up like some business within our fund. And I said, okay, if you get it going, we can run it as like a separate strategy. But then he left and pursued a different career, just full crypto in Russia and Moscow actually. But he couldn't actually get it going. That was kind of interesting. It's all these interesting facets and everything.
Right.
And then when I worked for like an institutional bank, and I traded crypto as part of my multi-asset portfolio in 2019. And I would say this is really when I took like 10% of the capital that was entrusted to me from an institution really into crypto, and I traded it as part of the macro strategy. But then it was really only really in 2021 when I moved as a CIO for a crypto conglomerate and traded really crypto there, oversaw the crypto funds, and now I'm at a company called Matrixport that is quite well known in the crypto space because it was founded by one of the legendary mining people in China, really Bitcoin mining people, and I'm head of research there. So it was like many steps, and I think it's just like a story itself. But I think as many people you dabble a little bit in, you hear it, you do a little bit on the side, but really jumping full time into it, it took a little bit of time.
So I think if you started in 2013, then you are one of the OGs of crypto. I think that's what we can call you.
Well, I mean, I wouldn't call myself OG because it was just like very, very small, and it was really like minor, and it was just like a little bit on the side. I mean, a few things I discovered by, for example, writing this book, really, that my boss, he invested like 1,000 Bitcoin, and he made like 500x return in 2013. So there, so I wouldn't really compare myself to those kind of people. But
Awesome. So Marcus, if you have to explain to let's say a 8-year-old kid, what do you do for a living currently in very simple words, maybe in just 25 words, explain that. How will you explain what you do currently?
Well, I'm trying to predict where basically digital asset prices go. I think that's kind of like the quickest analysis. And I think it's with any, I guess with any asset, with anything that trades, right? You are trying to predict really the prices, and that's really what you do. It doesn't matter if it's digital assets or stocks or commodities or carpets or whatever it is. You're just trying to be ahead of the curve, and you're just trying to predict how people make decisions and when.
Right, right. So, Marcus, what I understand is that you come from a traditional finance background and then started learning about digital assets, crypto, and then you started maybe convincing your companies to start investing small in
Yeah.
crypto. Uh, so, since you started in 2013 and now it's 2023, it has been a 10-year journey. What are some of the changes which you have seen in mindset of, and I'm asking specifically because we have seen a huge bull run from retail, but from institutions, what are certain things which you see which have changed or which still needs to be changed in a span of 10 years?
Yeah, so basically, I mean, 2013, there wasn't really, much happening. I think you can argue compared to now. Ecosystem was like very small, and it was just a little bit like on the side, really. It wasn't really, taking much of my time, and you just looked at it, and you just looked at it. Basically, that's all you could do. It was really then when there was some Bitcoin protocol upgrades and changes over time, and of course when more and more stuff was developed, and when Ethereum came online and everything. But I think before it was more kind of for technology enthusiasts, and I think it was probably like Mark Andreessen who came also out with an article, and maybe even in 2013 it was, he was quite optimistic about it, but it really didn't catch a fire back then. And I think for institutions, the big difference, I think there are two really major events that happen. Is number one, of course, that the market cap has been become quite large, and that's when institutions say like, hey, why don't we allocate some capital, because suddenly this trades like $1 trillion or 2 or 3 where we at the peak, so it becomes suddenly like meaningful. And of course there was also like more demand from really the high net worth individuals, the family offices, they have like a little bit longer time horizons, and the imagination is always, oh, if we just put in like 1% of our capital in it, it maybe becomes 10% over time because it has such a strong growth and adoption role. But I think the other aspect was also, of course, the usage of stable coins, where suddenly you could do a lot of arbitrage between exchanges, so you could move the money around. And this is something that, again, my analyst in 2015 tried, but it couldn't get it working because stable coins wasn't really that used. So you needed to move capital, you needed to move your BTC from one exchange to another and trade it around. And the liquidity wasn't really there. But this has, of course, changed. And of course, now a low day is really like $30 billion of trading volume. And this is how much the stock exchanges of Japan and Korea trade combined. But on a good day, it can easily trade more than the US stock market. So that's why I think institutions are starting to look at it, or have started to look at it. It has come down now a little bit, of course, but I think people have still built their capabilities and are still quite optimistic about it. They're just still in the waiting game right now.
And Marcus, we hear this a lot of time that Bitcoin crypto was supposed to be a decentralized currency, and this is how it is supposed to be run. However, what we have seen and what we hear is that once institutions come, it becomes centralized, then the whole system changes. So what are your views on this? Since you understand this whole game better than all of us, what are your views on this?
Well, what normally happens is really that the volatility goes down, because you suddenly have people that are not just like holding for the long term, rather they're managing the portfolio. And this means, of course, they're trying to sell upside calls. The miners are, for example, doing this. The miners that are not in a hurry to sell inventory meaning the Bitcoin itself that they mine, they would sell some upside calls, and this is when the volatility starts to get compressed over time. And I think we're really seeing this, because I think over the last 5 years, Bitcoin 30-day volatility has been around like 66%, and we are now just at 32%. So we're dropping off sharply, and I think one reason is, of course, that miners have to manage the cycle a lot better. They have to manage the inventory a lot more careful. And of course, some of the institutions that have entered the space, they say, oh, you know what, we can make like 20% per year just selling upside calls. And if Bitcoin prices rally 30, 40% from here, yes, we lose the exposure, but we still make the money on selling the upside vol. And I think this is where we're starting to actually to see the volatility being kept. And this used to be actually, as they say, a feature, not the bug of the crypto market, that volatility is so strong, and we don't really see this anymore. And this is, I think, because we're starting to see more institutional players being active. And I think what has also changed a little bit especially over the last 12 to 18 months, is really that some of the hedge funds that have entered crypto are actually more arbitrage hedge funds. So they're not trying to make 5x or even 2x. They're really trying to make 10, 20% after their cost, after their funding, and really just trying to arbitrage the market. And I think this is really a different investor type. But of course, this investor type with deep pockets and with larger capital base. And of course, what they're trying to do is really just pocketing the spread. And the result will be that volatility is coming in lower. And I think this is what we're seeing now.
So this will eventually, I'm assuming this will eventually calm down the markets and things will become more stable, more organized as compared to what we have seen in past.
Yeah, I think that's what we're seeing, and I think that's really kind of the maturity of the market.
And when you say institutions are investing in crypto, so is it only restricted to Bitcoin and Ethereum, or I'm not assuming that institutions would be taking Pepe coin or Shiba Inu, but are they also investing? Are they also open and investing in altcoins, or is it only Bitcoin and Ethereum as of now?
Well, of course, Bitcoin and Ethereum are both listed and accessible to the Chicago Mercantile Exchange, so the CME, where institutions can easily buy, futures, and the futures, of course, is a derivative of the physical Bitcoin and Ethereum themselves, so they can easily buy those. But I think there have been also a lot more tracking and index funds in the market that look at the top 10, top 5, and of course they have their Solanas in there and some other altcoins really. And I think there has been done a lot of work over the last kind of 12, 18 months also. Again, it has, of course, slowed down now because, in a bear market, it's very tough to convince those investors to allocate more capital. But I think people have been doing their research, and really people have done their homework, where to invest and where to position themselves. So I think there is capital also waiting for the number 2, number 3, number 4, number 5 tokens, because people kind of assume that the upside for Bitcoin might be a little bit capped in terms of, can you double your money? Maybe, but can you make 3 or 4 times your capital is a little bit, questionable. And I think when you look, for example, how I think Solana, of course, has a massive move from above 200 to really just, let's say $20. So can Solana, double or triple? It could, right? I mean, there have been some outages and some problems and some network issues, but in effect, I mean, it can also solve a problem. And I think we're going actually to a way where, similar to traditional finance, where you basically have 5 major currencies. You don't have just one. Yes, a lot of it's settled in the US dollars, but of course you have the Japanese yen, you have the euro, you have the British pound, and it's still going a lot of volumes with those. And I think it's very similar with cryptocurrencies, where you not have just like 1 or 2. I mean, there are some use cases for various ones, and I think having like a diversified portfolio of like 5 different ones, definitely makes sense.
Understood. And Marcus, now coming to the point. So Marcus, why I said Marcus is a very special guest, because Marcus has recently launched a book which takes care of all which he has put all his heart and soul in last 10 years of what he has learned. So Marcus, tell us something about the book. How does the inspiration came, when you started writing it, and what all is in the book?
Yeah, I mean, thanks for asking. I mean, it's, the inspiration came through, various people that have written books, that are, in the markets, that have, been telling me some of the history. And it was just kind of like initially like an approach for me to really piece the pieces together. I mean, when did Binance become big? What was really the trigger? When stablecoin really started to be used, and a lot of the stuff just really happened over the last kind of like 2-3 years. So you don't need to be there on day one. And I think the market has really evolved. And what this book actually turned out, and then there was just really no agenda initially. It was just really trying to piece the pieces together. And I think it has come out something like a history book. If you want to learn about World War II, you don't need to understand how the nuclear bomb really works. And I think it's very similar a little bit with crypto. You don't need to understand how Solidity works, how the programming languages work. But I think you still want to know, what were the battles of World War II? Of course, why did this happen? How did the sentiment change? And I think with this book, it looks at kind of the last 12 years, and it analyzes the 4 crypto bull markets. So we had like one in 2011, 13, 17, and 21. What were the drivers? What were the players? Looking at their backgrounds. And it's really quite interesting and remarkable that, how everything actually is very connected. I mean, the fact is, as I was just saying, that, Binance became like, sort of big overnight because there was just one event. And I think with a lot of other things were also quite inspirational. When, I mean, one of my favorite examples is that one of the, leading exchanges was actually, I guess the blueprint was used by somebody who was just 17 years old and built an exchange, programmed it at home really within like a week. And, some of the source code was leaked, and this source code was used by another exchange. And then this other exchange became actually quite big because of this. I mean, there's really like, really interesting stories that, that I was able to kind of piece together. But of course I try to stay rather neutral and have like an, observatory viewpoint. And so far the feedback has been really strong. And I'm of course quite happy because I just got really good feedback just before this, for this call or this podcast. And so I'm really pleased about it.
So when did you started writing about this book, and when was the initial idea started that you should write a book about it?
So the initial idea was almost exactly a year ago at the FTX conference in the Bahamas, and it's quite interesting because there was of course a rumor that Michael Lewis would be writing a book about Sam Bankman-Fried, and I was just thinking if you just write a book about like one person, maybe that's a little bit too boring or too niche for the crypto market because there's so much more. And it happened that there was this panel where my ex-boss was sitting with Suzu, of course, from 3 Hours, and he was sharing the panel. And I was saying with my ex-boss and my current boss. So basically, all these three were on the panel there, and I was just thinking, these guys are like, very well connected and very well known in the industry and leading figures. I mean, there's more to tell, right? There's more to tell. And of course, I thought it's more interesting to write a book from let's say a market practitioner, somebody who has been trading in the industry and knows a little bit like inside information, you might call it, right? A little deeper, certain things, instead of just like a journalist who just puts the pieces together. And that's what I was trying to do. And again, there were some other interesting pieces, which is anyways, but that was the main trigger.
Oh, and it took you almost 1 year to finish this book and get it published. So it has been a humongous task to finish, and so many stories. And as they say that 1 year in crypto is like 5 years in a Web2 environment. So must have been a very, very tedious job for you to do that.
Well, I mean, I put notes together just for myself, and because I write, for example, research and inform, some of our institutional clients and investors. But of course, it was like really focused on when the Terra Luna implosion happened, and of course on the other events as well. But I really started writing this book only in November, and the book really covers really all the events up to March, April this year. So the whole choke point is in it, and whatever has been revealed is all in it, and the lawsuits and everything. So it's really up to date. And yes, I mean, I'm always like quite amazed when I go through it and reread certain passages, how much really has happened within just like a year. And again, I see myself still, in the crowd basically of the FTX conference, and almost like everybody was there. Kevin O'Leary was of course cheering for Sam Bankman-Fried. Of course, he has become very quiet now since it was revealed that he got like $15 million in, marketing or promoting expenses. And but it's just, I mean, it seems really just like a year ago, and I think the world has changed so much, and it's just incredible. Yeah, I mean, it's definitely what makes crypto really exciting. And I think a year from now, things might be even a little bit more different.
Right. So, I mean, Marcus, you have seen this whole journey of crypto, and you have seen multiple bull runs as well. What do you think? I mean, I would say, what do you think is which countries or which geographical areas or which technologies do you think when the next bull market will start? Obviously, it's just a assumption, but from your understanding, what do you think about it?
Yeah. So one of the key aspects actually I learned from this book, because everybody focused so much more on on protocol, Pepe is this, Pepe is that, Dino is not hot, and all these things. But there is actually a bigger over driving trend in everything in crypto as well. So crypto is also really driven a lot by top down, and some people try to explain the waves and the bull markets, based on a pattern of like somehow 3 years, somehow 4 years, somehow it's related to the Bitcoin mining. But maybe this could be all like wrongly assumed, because one thing I discovered is actually, and I write about this in this book, that is very often also driven with like some policy decisions. So actually the governments really drive some of those policy cycles. So one of the strongest bull market that we had in crypto, actually it was the strongest in 2013. It was initially driven by some enforcement actions in the US in March 2013 that really drove a lot of the innovation outside of the US. But at the same time, it was really China that really opened up to crypto and really was praising it through a CCTV documentary. So it's like a state-run TV channel. They had a 30-minute documentary really praising Bitcoin as the new money. And of course, when you tell Chinese people here's the new money, with money that they could potentially bring overseas, a lot of money went into crypto then, and suddenly China crypto trading accounted for 70-80% of all the crypto trading in the world. And on top of this, Baidu, which is of course the sort of the Google of China, came out and was accepting Bitcoin for some payment services, and then really the Bitcoin price really ramped up a lot. So it's a lot of those moments where there are some top-down policy decisions that are driving it, and not necessarily when somebody develops a new programming language or comes out with a new source code or a new DeFi project. It's really these bigger movements, and I think this goes back to your question that in an environment like right now where some jurisdictions seem to be more favorable, some less favorable, it doesn't really take much for a tipping point in crypto where some of the innovation moves all to one place and really unfolds there. And I think this can really well happen. I mean, of course, we know that the Middle East, especially Abu Dhabi, is very positive on crypto, and they have said they're gonna put aside like $2 billion to support the ecosystem. I mean, if they really play their cards well and be really aggressive and forceful in this, I think they can attract a lot of talent. Even, of course, Abu Dhabi is a relatively small city with just like 1.5 million people, compared to London, 7-8 million, compared, of course, to New York, Tokyo, and other large cities. But I think if they play their cards well, they can attract a lot of talent, and it can actually make a difference, because there are around 420 million people in the world that have cryptocurrency holdings. So it's not going to go away. I mean, this is for me the main conclusion. It doesn't matter if you're bullish or bearish; it will just not go away. It will be just like water, where it goes just for the least resistance. And I think this is very similar. So again, I think it is really the jurisdiction that provides now the least resistance and offers the right infrastructure and environment. I think that can attract a lot of talent, and who knows where we are in 5 years.
Right. And Markus, you said that Baidu and the documentary. So I think it's also a lot of time that the narrative which the media pushes. For example, you've also written a book. You're also talking to a lot of audiences. It puts you also a lot of responsibility, because your actions can actually trigger a lot of small things, and people do get affected by this. So how have you taken care of this in your book? And end of the day, we all are human beings, so we also have certain biases. But when you're writing a book, there are a lot of things which you also have to keep in mind. Talk only about facts. So how have you kept that in mind while writing this book?
Yeah, very interesting, because I didn't have a bias or any agenda. I don't, the plan was not to write a book, Bitcoin is inevitable. That was not the plan. The plan was to put the pieces all together. The plan was to really provide in one book the complete, or as far as possible, the complete history, how crypto has actually evolved, moved through the cycles, what were the drivers, what were the various bull markets, who were the players, who started, who was the key player in 2013, 15, how this has all evolved. And, of course, you can piece it all together, but I think this book really does it all for you. And actually, I'm using 631 references. So it's really a highly researched book. It's not about my opinion. It's not what I think. It's really these events. And of course, there can be some dispute about certain events, because some people remember them like differently. But I'm really going back to the comparison of, it's sort of like, if you want to learn about World War II, you can pick up 1,000 history books. But if you want to learn about the history really of the crypto markets, there's not one book that captures everything. And I try to capture everything as much as possible. Of course, at one point you have to stop, because there's just like so much happening. But if you spend one weekend reading this book, I'm very sure a lot more. And I had quite senior people also reviewing the book before I published. Right, I had the CEO of Wintermut. He read it. He read the whole book. And thanks to him, he also read like sort of like an unedited version, because it wasn't really edited yet. It was all like moving in parallel. It was all very quickly. And a lot of other people, or several other people read it as well. So I really took like their feedback in. And of course, the feedback has been, well, it's a neutral. It's it's for the reader to come up with their own opinion about it. But I provide you all the facts. So this is why, if you're a regulator, you read the book, well, you might take a certain opinion out of it because you put your own opinion. But it's really the fact. I think the fact is for you to decide. And I wanted to give everybody the opportunity, because it's also like a responsibility, right? There's no need to push somebody into any token that that might go down a lot. But I think I want to give you the tools and to see really the big cycles and to watch out for those events. Because right now people kind of hear a little bit, US is negative, but what does it really mean? What does it really impact? And I think we can go back in the history of the cryptocurrency markets. If and when government has been negative or positive, it might have like a huge impact for the region, for the city, for the area, and for the development of the ecosystem.
So I think, Marcus, you have created a new term and a new position called as crypto historian. If you are the first one to create this, and hopefully in future we'll see a lot of crypto historians as well talking about the whole history of crypto.
Yeah, actually, it's interesting that you say this, because I also thought about it, and crypto historian sounds like so boring, right? It's just like, it's almost like the opposite of crypto, But I think it's actually important to know, and there has been a lot of appreciation. And again, just talking again about Yevgeny from Wintermut. I mean, he said, well, because he started trading really in 2017, but he had like no idea what happened before, so he really appreciated to just get like a up to speed, what happened before. And I think that's kind of what we wanted to give to people, that if you start out now, you just read it and you're up to speed, or there's some some blanks you want to fill. I mean, this just really helps you. And but I also think crypto historian is maybe not bad, but it's interesting that you say this.
Awesome, Marcus. And Marcus, you spoke about that a lot of time golden starts because of the policies of countries. And now in last few months, we have been seeing a lot of narrative from US coming upon, SEC being very tough on crypto. So obviously, if it's, I will not hold you for this, but are you seeing certain similar kind of patterns which you saw in 2013? Your predictions, what do you feel will happen after this whole SEC crackdown?
Yeah, again, I think in 2013 we had some enforcement in the US where it just made it kind of quite expensive for crypto payment companies, crypto exchanges to operate there. And this is why we have actually not seen many US-based crypto firms really leading the pack, right? It's really it's really only like 2-3 exchanges that we have seen over the years, but there's not really it's not like a handful. So it's really, I think what happened is then the money moved outside, and it was really scaled in Asia. And Asia, of course, has around 260 million crypto users versus 50 million in the US. That's kind of some estimates. Of course, India is like the largest, with estimated like 100 million crypto users. But of course, we need to keep in mind that the capital in the US is a lot larger. So the 50 million might be it's definitely more firepower. But the comparison of 2013, where we suddenly saw a lot of those innovation move to Asia and really being able to be scaled in Asia. And I think this is really key, because it opened the level playing field where, for example, China was very constructive about it. Initially, of course, they changed their mind within a year as well. But then in Hong Kong, the Hong Kong Central Bank, the HKMA there, they were very open about it. And of course, then a lot of those Chinese crypto firms moved to Hong Kong. Other firms were set up there. For example, BitMEX was set up there. Then, Bitfinex, they were, of course, huge exchanges. And it was because Hong Kong was really more, call it libertarian. And I think it's really these policy moves that it's easy to overlook, right? It's maybe not necessarily the individual, let's say in the case of BitMEX, Arthur Hayes, set it up and build it. And, of course, he did like an incredible job with building the exchange. But it was really, the playground that was being offered by the regulator or by the monetary authority in Hong Kong that really made the difference. And I think we need to really look out for those things, because that's where we can determine, who might be the next winners from which area. And again, I think it's very overlooked, because people just suddenly, don't really look at it. They think crypto is not really about those top-down policy decisions. But I think it seems to be the case. This is why we should really keep a close eye on this.
So Marcus, now if US is out, China is out, obviously we know Dubai, Abu Dhabi have been pushing a lot for a good crypto case. According to you, which are the top 5 countries which are crypto friendly, where do you think a lot of people are investing in, from where the next things can come up from? Which are the country very bullish on for crypto adoption?
Yeah, I think a little bit my secret country that could do really well, it might actually be the UK. So of course we had some little hiccups, calling it like gambling the other day, but nevertheless, I mean, London has still the large financial infrastructure. So I wouldn't rule this out, and I think there has been some exercise made to make it really one of the leading centers. So I wouldn't rule this one out. So this will be my secret pick.
Understood. Great, Marcus. So so as we are about to finish our podcast, where users can buy a book, where is it available, and how can they get in touch with you if they want to get in touch with you?
Yeah, thanks for asking. I mean, the book is of course available on Amazon in print version. So of course we released actually all 3 versions. So we released the Kindle version, the paperback, and the hardcover version. It's also available in some bookstores. It's available on some other online platforms. I mean, I publish a lot on LinkedIn, so people can follow me on LinkedIn. I also publish some on Twitter. DeFi on Target is a Twitter handle, but the best way would be just to follow on LinkedIn, because I publish there every day. But of course, we also have for institutional investors, we have our research product that we send out regularly. But again, it's always some summary and insights and nuggets always published on LinkedIn as well.
Great, Marcus. Thank you for your time. And those who are, I will put the link of the book as well in the comment section. You guys can go, and I'll again call Marcus as the crypto historian, as somebody which is the first historic book which is written. So prepare for the next season. Read history, and because as they say, history repeats itself. So you will know, oh, here's the book. Yeah. So you can read this book and learn a lot from Marcus' experience of almost a decade, and then get to know what is crypto, because this is just the starting. We are just starting. This is a huge road to go ahead from here.